Hello guys, welcome back to a new video. In today's video I want to break down one of the most important concepts when it comes to understanding price movement, and that is the AMD model. The AMD stands for accumulation, manipulation and distribution. A lot of traders focus too much on entries without really understanding what phase in the market they are in, and that's exactly why they get trapped. So in this video I'm going to first explain the concept with a few slides, and after that we go to the charts to look at some real examples. If you like this video, please like and subscribe. What is the AMD model? It's a framework to understand how price moves. It shows how markets build liquidity before the move happens, helps traders avoid entering too early, gives more structure to timing and execution. AMD is basically a framework that helps you understanding price movement in a more structural way. Instead of looking at random candles, you try to identify what phase of the market you're currently in. Price does not just move randomly. First, liquidity is built in the accumulation phase, and then the liquidity is taken out in the opposite side that price wants to move. So see it like this way. If you are bullish for the day, you know your higher time frame analysis, you know price will go to the previous day high as example. So what you're looking for, you will first look for the manipulation the other way around. So a manipulation down, like in this example. Maybe we can zoom in a little bit, but maybe we can see like this. First, we accumulate the orders after the Asia session right here. We accumulate a little bit, price gets slow. After that, we get a little bit of fast move down. So we take out the liquidity of the low of that accumulation phase. After that, we distribute it again higher. So I was on this day bullish. I was looking for bullish buys to trade. This was the line of the previous day high, and this was the line of the previous week high. So we took out two important of major liquidity magnets. And see like this. First, the orders are built up. After that, we manipulate the other side, the other way down or up, and after that, we distribute up or down. This is an AMD scenario for bullish price action, but for bearish price action, it's also the same. But we first get a manipulation up. After that, we distribute down to a liquidity magnet or another major liquidity point. Why AMDs matter? Most traders entry at the wrong time. And why I'm saying this is like, if you're bullish for the day and you're a great trader, you're looking for buys, but if you don't understand the AMD model, most times you will just get SL before price will just move to your TP. So you have to know in what phase you are. If you're in accumulating phase and you're buying and you know price will go up, and maybe it will go up before price goes up, it will first take your SL out and manipulate first down before going to the buy side. And that's where most traders get it wrong. You have to first understand the AMD cycle, and it will improve your patience and timing. It will also separate the fake moves from the real moves. So please know where you are at the market. If the AMD is not ready and we're just in accumulating phase and orders are building up and your entry, two things can happen. Or you get manipulated down, SL hit, or you got the whole market wrong and price will just distribute the other way around. So you have to know where and when you are. The three phases of AMD, you have here accumulating phase, the manipulation phase, and the distribution phase. And for a bearish setup, it's the same, but the other way around. Accumulation phase, manipulation phase, and distribution phase. And as it stands right here, first price builds up, then it traps, and then it expands. Builds up, traps, expands, build up, traps, expands. So it's like the power of three. And what I was saying on one slide before this, if you don't know in what phase you are in the price or in market, and you will just enter right here in accumulation phase and buy, enter right here in bar like that. Most times, if it manipulates down before it goes up, you'll get SL'd. But if you were short and you were like here and it traps you right here and think, oh, let's go to the TP, it will also catch you out. So you really have to know what phase you are. But if you don't know, you will get SL'd both ways. So let's go to the chart and look at some examples. Right here, we have a beautiful example. I will put all the drawing away. This was a beautiful example. As right here, price is accumulating orders. Price is slow, it's just ranging and consolidating. As you see right here, slow price action. After that, we take out every higher right here and we get the move down. So if you want to draw this move, you can say like this. I'll draw it. I also took a trade on this a little bit early, but my SL was really high, so it wasn't a great trade. This would be the accumulating phase. This would then be the manipulation phase. And right here we have the expansion phase. And the target was, I think, the previous month low, as you see right here. So you had 3 phases: accumulation, orders accumulating, price is slow, the manipulation phase. So price manipulate first the opposite direction before we go lower. So as you see right here, the whole market was bearish for the week, and it was Friday. So I really was thinking like a Friday, it's going to be a continuation. So I was already looking for shorts, and it happened right here. Accumulating, manipulating. After that, we got a really fast movement lower, and that was the distribution phase. So the 3 letters, the A, the M, and the D, the AMD model, really easy. And this is for a bearish scenario. And if I will look, oh, I put the wrong ground away, but it's the same as the bullish scenario, but the other way around. And it's not really difficult to use it. So I get also a question, how did I use it? So I knew, you have to see it like this. If you want to use it, you have first to have a bias and a point of direction. So I really knew that we were going lower. I speculated on lower prices. So what I did was waiting when market built up price, so accumulated. After that, when the manipulation phase happened, we also got a turtle soup. I dared to entry on an order block and an OT right here. So I knew that this is just a pure manipulation phase to go lower. Another way to enter it is wait on the second leg. In this market, it was a little bit, in this price action, let me say like this day was a little bit difficult because why? It was Friday and almost the market closed. You really didn't have the second leg. But most times, if you want to see a trade like this, you want to also see something like this. Wait a second. So we accumulated orders right here, as you saw right there. After that, we manipulated higher and we went a little bit lower. So what you want to see before, like maybe like here is a previous day low, so the major liquidity isn't taken out. You want to entry on the second leg. That's the most probable and you'll get the best win rate. So something like this. Say right here is the previous day low. And this is then accumulation and manipulation. And you want to entry in the distribution phase, but on the second leg. So if you see like here, we're going to continuation close and you see the change of state of delivery, change of character, everything. You want to see something like a gap right here or an order block to entry right here, or maybe even OT. So if you take your OT drawing, maybe you can even entry OT right here. You would have entered in the OT SL on the high because you know the high is protected because an AMD model, and your TP on the previous day low. That's a great example how to entry on an AMD model. I cannot make it more easy like this, and for my feeling, this is the most, or the best example I can give you. And this is for a bearish scenario. And of course, for a bullish scenario, it's going to be the other way around. So let's draw that also. 1 second. A little bit bad drawing, but I don't care. So right here, we get a manipulation first. Let's make it a little bit bigger. Maybe this is a really bad example, but I can live with it. So right here, we have the accumulation phase. So institutions are building up buy and sell orders on both sides on the liquidity curve. Like here, it's accumulating orders. After that, we manipulate down, so the opposite direction of where price really wants to go. Right here, and the entry would have been something if price came right a little bit right in, down right here in a gap maybe, or an order block, or maybe there was here a breaker block that you could have entered. So maybe something like this, and the entry would have been here. Your SL would have put on the low, and the TP would have gone to 2 risk reward, something like this. And why this is crucial? Because I was already talking, maybe if you're long, but you're entering on an AMD or in the accumulation phase, and your SL was maybe on this low, you would have stop loss before you took 2 risk reward to your TP. And that's the reason why it's important to know in what phase you're entering. Okay guys, that was it for this video. It was a really short one, but I believe me, we will upload again more. Link in the bio is my Discord. It's completely free. It's about learning trading, networking with other traders, and talk about trade ideas. Link that's in the bio, and please subscribe and like if you like this video. I will see you guys the next time.